You need good credit for things like insurance discounts, borrowing money, saving on interest rates, and in some cases to rent an apartment. But how do you build your credit? Or how do you fix your credit when you've made some mistakes in the past? To celebrate Military Appreciation Month, I'm sharing a weekly how-to video each week of May. Right now, I'm going to talk about how to build and fix your credit. Support for this video comes from Self. Whether you need to establish or rebuild credit from scratch, Self can help you build credit and savings to achieve your dreams. You can learn more at Self.inc. I'm going to go over what good credit is, why it's important, and how to build good credit. I'm also going to cover how to fix your credit because nobody's perfect with money. If someone says they're perfect with money, they probably are lying. We all make mistakes, and that is understandable, but it isn't good if you keep making the same mistakes instead of taking action to fix them. Building and fixing credit can seem overwhelming when you're starting out, but a little knowledge about how credit works and some tools that you can use will help make the process go a lot smoother. Here is how to build and fix your credit. First, let's start with what does having good credit even mean? Me and every other financial professional tell you to have good credit, but those are words. What does that look like in real life? What does good credit look like? To understand what good credit is, we first have to talk about your credit report. Your credit report and credit history are the same things. They are a record of your behavior with debt. It's your money history, and depending on your behaviors, your report can be good or bad. The better your credit report is, the better your credit score is. And the better your credit score is means you have good credit. I know, it's a lot to take in. Your report shows the money you've borrowed and your payment history. It tracks whether or not you paid on time and the types of credit you have. Your report contains your basic information like your name, your social security number, and your address, as well as 5 key areas that determine your credit score. Your credit score is a 3-digit number that uses those 5 key areas to determine how likely you are to pay your bills or meet your financial obligations. The higher that number is, the better your credit is considered. The 5 areas that make up the score is 1, your payment history, 2, the amounts you owe, 3, the length of credit, 4, the types of credit, and the 5th and final one is new or recent credit. So under the first one, payment history, that makes up around 35% of your credit score. That's why on-time payments are so important. They are crucial. They carry the most weight. Paying your debt on time reflects positively on your credit score and will improve it over time. In comparison, late payments or no payments will have negative impact and reduce your credit score, which isn't good. Your payment history helps lenders determine if you meet your financial obligations. Under the second area, the amounts you owe or credit utilization. Your credit utilization, or the amount of money that you owe, is 30% of your credit score calculation. It factors in your revolving debt like credit cards and loans that you have available and are currently using. To calculate your credit utilization, you add up all of the balances of your debt and add up all of your credit limits from your current credit report. Then you divide your total balances by your total limits to get your credit utilization ratio. The lower your credit utilization is, the better your credit score will be. Yes, the lower, the better, but you want it to be at least below 30%. Anything higher shows that you may have a hard time making payments on any new debt that you take on. So that's not good. The credit bureau does not see that as a good thing. The third part is the age or length of your credit. The age of your credit accounts for 15% of your credit score. So how long you've had active credit accounts helps lenders determine if you're an acceptable credit risk. The longer your accounts have been open, the better your credit will be because you have a long history to review. That's why it's essential to keep the account you've had open the longest, continue to have it open. The next one is the type of credit. The types of credit, the types of accounts or your credit mix of accounts for about 10% of your credit score. Different credit types would be installment loans like credit or home loans, and revolving credit such as credit cards. There is no perfect combination here, so you don't have to, go and get one of each. Just a record of you making payments on various types of credit. The last area is that new or recent credit. It makes up 10% of your credit score and shows how frequently you've applied for new credit in the past 2 years and how frequently you are applying or actively applying for new credit. The more recent and often you apply for credit can seem that you are an increased risk to loan money to, so it's not a good thing. So now I want to talk about what is a good credit score. Scoring models vary, but in general, a good credit score is in the range of 670 to 850. The total range of credit scores can be anything from 300 to 850. 300 to 579 is considered poor credit. 580 to 669 is considered fair. 670 to 739 is considered good, and 740 to 799 is very good, while 8 to 850 is excellent. If you are building your credit, know that you're working towards the 850 number. If you're fixing credit, the same goal. You want to work towards 850. The moral of this very long story is good credit would be having a credit score of 670 or higher. The higher, the better. Now I want to talk about why you should care about good credit and fixing your credit. Good credit saves you money, period, dot. When you have good credit, you pay less interest, have lower payments, and in some cases aren't required to make deposits for things like utilities. Good credit also allows you to borrow money, get insurance discount, rent apartments and homes. And whether you're on active duty, a reservist, a member of the Guard, or a veteran, good credit is essential to getting and maintaining a security clearance. It's part of the adjudication process. Not to mention, it's peace of mind to know your credit is in good standing. What does building and fixing your credit mean? When you've never borrowed money before, you have no credit. You have no credit history, so credit bureaus don't have the data to use to make a decision on if you're a risky bet to loan money to. Because of that, when you try to get your first credit card or a loan, you may get turned down because you don't have that credit history. Or if you do get the credit issued to you, it would be at a much higher interest rate than if you had good credit or you'd already established your credit. Fixing your credit can mean two things. First, there are some errors on your credit and that need to be corrected. Or the second thing, that you've damaged your credit in one of or some of the 5 areas your credit score is made up of. So for example, damage done in those areas would be something like in the last 3 months, you haven't paid or late on your credit card, or you went so long without paying on a loan that it went into collections or the debt was charged off. Those are examples of when you would need to improve or fix your credit. Now I want to talk about some of the best ways to build or fix your credit. So not just what it is, what you're going to do about it. The first place to start building good credit is to get a free copy of your credit report and check it for errors. You need to know where you're starting. You may already have bad credit history and not know that you're starting with that. Unfortunately, in some cases, family members steal identities because of their bad credit. So it is wise to review and check for errors from the get-go. Even if you think you have no credit history, you need to know where you stand. So getting a copy is important. You could also get a credit card. You can start building credit by getting a credit card with a low limit. Making small charges and paying off the balance monthly can help develop your credit. If you're just starting out, you may need to have somebody co-sign, or you could ask to be an authorized user on a parent or a loved one's account. That's another way to start building or fixing. You can also get a secured credit card that is attached to a savings account. The savings account money is collateral if you don't pay back what you spend. So you want to do the same thing as you would with a regular credit card and make small charges that you pay off monthly. Another way is to pay student loans on time. This is an easy way. If you have student loans, paying them on time and in full is one of the best ways to build your credit. Another way is to get a credit builder loan. They can help you develop your credit history. They work similar to a secured credit card. You deposit a set payment each month, and then you're able to borrow money against that amount. Your on-time payments are reported to your credit history via the credit bureaus. Self is a company that offers credit builder loans to help you build credit and savings by first applying for a small secured loan with one of their partner banks. The bank then secures your money in a certificate of deposit account from anywhere from 12 to 24 months. Then you repay the loan based on a repayment plan that fits into your budget. And every time a payment's made, it's reported to those credit bureaus. With each on-time payment, you are building up your credit or improving your credit if you've done some damage to it. Another way is to ask to pay with credit. When you have a bill due, ask for credit. Utility companies and rental agencies typically don't report your on-time payments to credit agencies unless you don't pay them. Then they will report that amount that you're behind. But a good way to build your credit is to ask your rental office or utility company to report good payment history to the agencies to build your credit. Experian Boost is a great resource to use for this, to help you use positive payment history to build or fix your credit. Experian Boost is a free program offered by Experian, which is one of the 3 credit bureaus. With Boost, you get credit for on-time payments for utilities, cell phone services, and some streaming services. And it's basically they're helping report good payment history for things like your Netflix or your rent. You do have to connect your bank account to use Boost, but once you do that, you select the positive payment history that you want to make, and then it goes to your credit report. So you have some flexibility, and most important, they don't report the bad stuff, which you don't want to negatively impact your credit. Another way is to keep your credit cards open. If you set up a credit card, don't close it. Keep it open. The longer you have a credit card open means the longer your credit history will be. And remember, your credit history is a big percentage of how your credit score is calculated, so that is a great way to help build it. Before we go on, I want to give you a word on repairing credit. When you need your credit improved, it may be tempting to just pay somebody to fix your mistakes, but don't do it. There is nothing a credit repair company can do that you can't do yourself for free. If there's a mistake, you can simply fix it with the credit bureau that produced the report that has the error on it. You cannot get repair companies to magically erase late or missed payments, which have a negative impact on your credit. The money you spend on those companies instead can go to either paying down debt or building up your savings. And if you need help to walk through this, you can use free resources like military installation financial counselors. They are trained to help you with disputing errors or fixing your credit or helping you build it. They're also trained to help you with budgeting to make a plan for getting your credit back on track. If you aren't eligible to use the installation financial counselors, those offices like Financial Readiness, you can use nonprofit organizations like the National Foundation of Credit Counseling to help you. They're also called the NFCC. There's also other resources that you can use to help build or improve or just get basic money management help. There is the aid societies. There's also Military One Source. There's the American Legion, the VFW. They have some financial help. And then there's also findhelp.org, where you can put in your zip code and find local assistance. Now, I want to talk about how to get a copy of your free credit report, because that is so important. As you build and improve your credit, you want to keep track of your progress. What gets measured gets improved. You can do that with a credit report. Each of the 3 credit bureaus, TransUnion, Equifax, and Experian, will give you a free copy of your credit report. Now, historically, it has been they only give you one every year. But right now, because of the pandemic, you can receive a free copy every week. Getting a copy of your report every week might not be for you, but at a minimum, you should be getting it 6 months or 12 months to check it for errors and to make sure that you don't have any items on your report that aren't yours. To get a copy of your free credit report, the first step you do is you go to annualcreditreport.com, you fill out a form, And then you're going to select how many reports you want. Do you want just one from TransUnion? You want one from Equifax? You want all three? You tell them how many you want, and they're going to give you some questions that you have to answer. They're based on items that are on your credit report that only you would be able to answer. Once you complete those answers, you can print and save your credit report. Now, I want to talk about how you can improve your credit. After you print your report, review it for errors. Look for errors like debt that isn't yours, incorrect balances, or wrong dates. That's really big because a wrong date is going to throw off your length of credit, which has a big impact on your credit score. If you find an error, you can either go directly to the lender or the debt holder and ask them to correct it, or you can file a dispute with the credit bureau that has the debt error listed on it. And you can either dispute it online, by mail, or you can call in. The directions to dispute are on each of the credit reports. So you can find it right there on your report how to fix the problem. Once you submit it, they'll review it. If they can verify the information is incorrect, they will either update it or delete the error from your report. Now, negative information on your credit report that is correct, only time will heal that wound. Negative information like late payments, charge off, or debt and collections takes 7 years to come off your credit report. And if you have bankruptcy, it can take up to 10 years. So you're gonna have to be patient with that one, learn from the mistake, and let the time heal it. Now, if you want to improve your payment history makes up 35% of your credit score. So making on-time payments is crucial to fixing, repairing, improving your credit. It carries the most weight in your credit score. If you have any late payments, you want to get those accounts paid ASAP. Or if you have any debt and collections, you need to get those paid off soon, especially if you have a security clearance. It's really important to get that handled right away. If you're struggling financially and aren't maybe able to make those payments, the military aid societies, the veteran organizations, findhelp.org can get you financial assistance either through a grant or loan, and a financial counselor or coach to help walk you through that. The next way to improve is your credit utilization, or the amount of money you owe. That is 30%. It factors in those things, the revolving debt, like credit cards and loans that you have and are currently using. When you can't improve negative information like late payments, bankruptcies, you can make your credit better by paying down debt balances to improve that credit utilization score, which will improve your overall credit. So there's some things that you can't control and make better, but there are things that you can. So those are the things you need to focus on. Other ways you can improve your credit are to reduce the number of credit cards or debt that you have by paying off the loans, and don't take out any new credit. That can also help improve things. If you just work on what you have instead of taking out new things, because new credit makes up 10% of your credit score. So avoiding it will help offset some of the negative information that is going to be on your report. So that is how you build and repair your credit. I want you to remember that good credit is having a credit score of over 670. I'd also like you to add that having good credit also means good money management habits, and it's peace of mind, less stress. Good credit also saves you money, and when you save money, that means that you're able to build wealth sooner and over time. And to build or repair your credit, you need to stay mindful of those 5 areas your credit score is made up of, with the big one being payment history. It's important when you borrow money to make your payments on time. It is crucial. When you build good credit, it saves you money, protects your security clearance, gets you better rate, and reduces the overall stress from your personal finances. I want to say thank you to Self for the work they do to help others build credit and savings. To learn more about Self and their credit builder accounts, visit Self.inc. I appreciate you watching.